November was a tough month for IPOs, or was it? I'm here with Scott Culler from the New York Stock Exchange. So Scott, a lot of people looked at November as being not such a good month for IPOs. Were withdrawn names and it didn't seem as many deals got out, but you feel like, no, that's not the case. It was a good month.
Well, it wasn't a good month in the sense that there weren't transactions that came to the market, but quite frankly, we didn't expect many to come to the market given just the natural barriers, which were the U.S. election and the Thanksgiving holiday. So it was really difficult to even hit any of the windows in November. I think December is a little bit of a different story. We actually thought that we'd see, at least on the NYSE, 4 to 6 transactions, but it looks like at least many of those are pushing their time frames back into the beginning of next year. And so December looks like it's going to be more of a extenuation of the market.
When we went into 2012, you bring up a good point, it seemed like we had a huge pipeline of deals to get done, and then it seemed to me that about half of them got done. What is your feeling about that? I mean, what about all these deals that have been in the pipeline for so long?
Well, starting actually in October of 2010, we said that we had the highest pipeline of deals that we had seen in a number of years. That pipeline has effectively maintained its same level, which means that the number of companies that have gone public, we've had a similar influx of companies that have filed to go public. And that pipeline has remained fairly consistent. This year on the NYSE, we'll do nearly $33 billion in IPOs, slightly more than we did last year in terms of number, about the same size in terms of total capital raised. And it's been the only market in the world that's actually been working where deals are getting executed. And I actually feel pretty confident that next year, particularly with the Jobs Act and other things, that companies are going to continue to come to the market. If you look at the data, the U.S. has really been the only market that's been operating full functioning for the entire part of 2012. In prior years, it's been Hong Kong, Shanghai, Shenzhen, New York. This year, New York is number one by a long shot. And so we feel the biggest difference right now is that the U.S. market is still the deepest market in the world. It's the deepest set of institutional and retail investors. And most importantly, companies are getting certainty around their ability to execute a transaction here. Europe is going to be slow for all of next year. Asia, I expect to be slow at least for the first 6 months of the year. And I expect the U.S. to remain open.
So U.S. is number one and stock exchange is number one?
Well, we were last year and we will again be this year.